Good morning, everyone. Well, the dollar is generally lower against its G10 counterparts Tuesday morning in Europe, despite comments from two Fed officials suggesting that tapering is on the way. St. Louis Fed President Bullard said there may be a small taper at next week's meeting, while Dallas Fed President Fisher said the central bank should begin to scale back its bond buying, quote, at the earliest opportunity, unquote. Nonetheless, the long-dated Fed funds futures were unchanged, and 10-year Treasury yields were actually down 1 basis point, indicating no change in the market's perception. Yesterday's action corroborates the message the market sent after Friday's non-farm payrolls. Tapering is already discounted and won't have that much impact when it does finally begin. It was particularly noticeable that the dollar fell against most emerging market currencies, as well as the G10 currencies overnight, indicating that those currencies may have also adjusted by and large to the inevitability of tapering. Now, the dollar gained versus the stocky and the yen, and eased versus the Noki, the Swiss franc, the euro, and especially against the pound. The pound was the best performing currency over the last 24 hours for reasons that are somewhat obscure. On the contrary, Bank of England Governor Carney repeated his usual comments warning against an early tightening, saying that, quote, if supply responds to recovering demand, unemployment will fall more slowly than otherwise, and the point at which we will reevaluate the stance of monetary policy will come later, unquote. It may be the reason that the pound recovered was because it was announced overnight that the Royal Institute of Chartered Surveyors, the RICS, house price index rose to 58% in November, the highest level since June of 2002. That's up from 57% in the previous month. But that was below market estimates of 60%. And besides, it came out 2 hours before the pound surge, leaving the reason kind of still a bit obscure. At least the trigger, what the trigger was for that surge. The strong performance of the pound, though, overall, is based on solid fundamentals. And with a technical picture for sterling also looking bullish, we believe the pound can continue to move higher in the near term. Meanwhile, the yen seems like they remained under pressure from both economics and geopolitics, in my view. Today, we've got several European countries releasing their industrial production for October. France and Italy are expected to show modest rises in production, which could be a little bit euro supportive. The UK is also going to release its industrial production figures, and they're expected to rise too, although not as much as in September. But Britain's also expected to show a narrowing in the trade deficit for October. So rising output and a narrowing trade deficit would further confirm the bullish outlook for the pound. Elsewhere, ECB President Draghi speaks at a conference. He's usually dovish, so his comments could be euro negative. Finally, the EU finance ministers meet to try to break a deadlock on a euro area bank failure authority. Progress there would be seen as positive for the euro, very positive, but well, failure would probably be taken as just par for the course. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX, wishing you solid trading.